There are many ETF portfolios that can generate great results. There are some that are more popular than others. In general, when picking an ETF to invest, there are a couple things that you might want to understand beforehand. Some of those things are performance over time and returns. Obviously, you want to invest into ETFs that have a track record of providing stable and sort of predictable performance and returns. Next, we have the underlying assets or index it tracks. You want to know, understand, and trust the asset or assets the ETF tracks. For example, ETFs that track the US market or the S&P 500 or a specific sector of the market. Sometimes ETFs track specific types of companies. For example, companies that pay a high dividend, or companies that are growing faster than the general market, or companies that are focused on technology, etc. Next thing you want to know and understand is liquidity. Liquidity is a very important factor. If an ETF has enough volume being traded frequently, that usually allows investors to buy and sell when needed without having to worry about price swings during a short period of time. Also, the more liquid an ETF is, usually the less likely it is to be manipulated by a big investor or institutions. And finally, the last thing to look at is brand trust and strategy. An ETF that has been created and set up by a trusted broker usually has safeguards and more advanced technologies to help that ETF perform better. In general, brokers with a reputation to protect will put a lot of emphasis in ensuring that the ETF actually performs how they expected it to perform. They invest a great deal of money, time, and resources to try to find ways and gain an edge for their investors. Now, let's talk about two options of very popular ETF portfolios. Each portfolio is made up of 3 ETFs. One of these portfolios is made up by Schwab's ETFs, and the other one is made up by ETFs from Vanguard. Let's see how these compare and why you would choose one over the other, and maybe why you wouldn't have to choose between them two. Let's also look at maybe why you should have a combined portfolio that uses the best from each broker. The 3 ETF portfolio from Schwab's is usually recommended by buying these 3 ETFs. Number 1 will be SCHB, number 2 will be SCHG, and number 3 will be SCHD. And the 3 ETF portfolio recommended by most from Vanguard will be these ETFs: VTI, VUG, and VYM. Now, let's compare these two portfolios and see how similar or different they are. Each of the portfolios has an ETF that tracks 1. The broad market, 2. Growth stocks, and 3. Dividend stocks. For Schwab's, we have SCHB tracking the broad market, SCHG tracking growth focused stocks, and SCHD tracking dividend paying stocks. For Vanguard, we have VTI tracking the broad market, VUG tracking growth stocks, and VYM tracking dividend paying stocks. Each of these might have a different ticker symbol, and they might be from different brokers, but there's a lot of overlap between these two. The overlap between these two is like this: SCHB and VTI have a 95% overlap, meaning that 95% of the stocks or holdings in one ETF is also in the other ETF. So basically, if you invest $100 into each of these ETFs, that means that $95 of those investments are buying the exact same thing in just 2 different ETFs. Between SCHG and VUG, we have an 81% overlap. Just now, 81% of the holdings are shared in between. Between SCHD and VYM, they share 21% overlap. Now, let's compare the performance of each ETF over the last 5 years, so you can get an idea of how these ETFs have performed over the long term. For SCHB, the return has been 15.18% over the last 5 years. For VTI, the return has been 15.15% over the last 5 years, with SCHB being a better performer over the last 5 years. For SCHG, the return has been 20.29% over the last 5 years, and for VUG, the return has been 18.98% over the last 5 years. Again, with SCHG being a better performer over the last 5 years. For SCHD, the return has been 13.08% over the last 5 years, and 11.43% for VYM. Again, with SCHD being a better performer over 5 years. As you can see, these returns over a longer period of time are very similar, and for most investors, they're not significant enough to really drive your decision when choosing to invest in one over the other. I think a more significant metric to evaluate is to take a look at how these ETFs perform when the market wasn't doing great. For example, over the last 10 years, excluding 2020 because of the pandemic, these were the worst 3 years of performance when it comes to these ETFs: 2022, 2018, and 2015. If I'm going to base my decisions on past performance, which you shouldn't, I like to look at how the ETF performed when things were doing great, but also take a look at how they reacted or performed when things were not doing so great. In 2022, SCHB returned a negative 19.45%, and VTI returned a negative 19.51%. In this case, SCHB performed less bad. For 2022, SCHG returned a negative 31.80%, while VUG returned a negative 33.15%. Again, the Schwab's ETF, SCHG, performed a little bit better during a time where the market wasn't doing great. SCHD returned a negative 3.23%, while VYM returned a negative 0.046%. In this case, the Vanguard ETF performed a bit better during that year, at least a dividend-paying ETF. Now, for 2018, SCHB returned a negative 5.30%, and VTI returned a negative 5.21%. Again, during that year, that Vanguard ETF performed better. For 2018, SCHG returned a negative 1.36%, while VUG returned a negative 3.3%. In that year, for that ETF, the Schwab's ETF performed a bit better. SCHD returned a negative 5.56%, and VYM returned a negative 5.91%. Again, that year, the Schwab's ETF performed better during the downturn. Now, moving on to 2015, SCHB returned a 0.39% in gains, and VTI returned a 0.36%. It was a bad year for all ETFs, but again, in this case, in that year for that ETF, the Schwab's ETF performed a bit better. SCHG returned 3.24% in gains, while VUG returned a 3.25%. That ETF for that year gave better returns. Then SCHD returned a negative 0.31%, while VYM returned a 0.28% in gains. So for that year, the VYM ETF actually did better. As we can see in this chart, performance was very similar in most cases. In general, I would decode this information as the Schwab's ETFs having a better performance overall when it comes to looking at the performance when things are doing great and when things are doing not so great. With this information so far, let me tell you how I would approach investing into these ETFs. Most of us won't notice a difference over the long term, and most of us don't have the resources to really track and try to time the market. So here's what I would do. If I wanted a 3 ETF portfolio, I would split my investments the following way. 50% of my investments will go into broad market ETFs, so things like VTI or SCHB. 30% of my investments will go into growth stocks, so things like SCHG or VUG. And the other 20% will go into high dividend paying stocks or ETFs like SCHD or VYM. I will try to use my Roth accounts if possible. But if I'm being honest with you, I think that having a constraint of only 3 ETFs to invest is not the right approach. I would actually probably like a bit more diversification and really buy into a combination of these ETFs. Things like a combination of SCHB and VTI, or some SCHG and VUG, and also a combination of SCHD and VYM. Instead of having to pick to invest, let's say $100 into SCHD or VYM, I will probably split my investments, those $100, into both, some SCHD and some VYM. I believe that you shouldn't focus on constraining your investments to only invest into a certain number of ETFs or investments. I think the focus should be to diversify into multiple sectors of the market and focus on growth and minimize your risk while you're growing. There are many other ETFs that you can buy or include in your investments. And there's great benefits from diversification. Including other ETFs can gain you that kind of diversification, more growth, and lower your risk. To learn more about those other ETFs, watch this video next. That video is about the top ETFs to buy and how they can help you better balance your portfolio. You will learn what kind of other benefits you could bring to the table by including other ETFs and why they can be a great addition to your portfolio and give you the flexibility to grow and diversification that you actually might be looking for. Don't forget to like and subscribe. Really helps the channel. Post any comments below. See you in the next video and let's grow together.